when I see, I think there's a lot of things right now that I think there's a lot of grift going on, right?
Of course,
and I agree with Chanos. I believe this is the golden age of fraud.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
And we are back. Thank you so much for joining us for another issue of the Daily Dots. And I'm joined as always by the brain trust himself, Mr. Chase Taylor. For those watching on YouTube, Friday is casual day, which is why I've got a baseball hat turned backwards and wearing a t-shirt. Chase, however,
some of us have to keep it professional.
Yes, look at him, man. He's suited and booted. He's keeping it classy.
I never know when Druck's going to drop him in and just want to chat markets with me. So
you stay classy, San Diego. That's why I love you. Okay, little rundown today. I got to tell you, today is one of those days where I don't know. Yeah, today is one of those days that irritated me. It irritated me.
A day that ends in Y?
Yeah, that's pretty much it. And no, just you have those days like you and I were laughing. We got hit for like 90 bips. It wasn't that bad, but just one of those days where you're checking the book and like it literally is like somebody looked at our book and they were like, "Hey, we're gonna flip everything backwards on these guys."
Almost nothing worked today.
Our shorts were down, or our shorts were up. Our longs were down.
Our favorite trades were down the most.
Yep. It's pretty fun.
Looking at you, Google and Silver.
The Circle did great, man. What are you talking about?
Oh yeah, I wish we bought that dumpster IPO.
Jeez, dude. Did you and I talk about this? The thing that I find really funny about stocks that run up like this after the IPO, they always give it back.
Very often, yes, it's true.
Yeah, and one of the primary reasons why, like I've tried to explain this to people 100 times. I'm like, guys, you need to accept something as fact and reality. Okay. IPO is typically the first real insider sale of volume, right, on a company, typically. Those guys that know the company the best, the people that founded it, that run it, they are not setting an IPO price with the thought that they could be 4 to 5 or 600% wrong in the next 30 days, right? So whenever I see a scenario like that, there's probably been an exception. I can't think of one. But whenever you see a scenario like that, you always see the stock get, or I've always seen this, not like I said, not always. I'm sure there's an exception. Yeah, I'm sure there's an exception. But you always see the stock get hammered and pull right back, usually close to IPO price, if not break below it. And the reason why is I'm sitting there going, you people that are bidding this thing up right here, right now, first of all, the vast majority of you have no clue what you even own. Second of all, you want me to believe that the people that built this company from the very ground up and the founders were willing to sell it? You think the market knows what that company's worth better than the people that founded it? I mean, come on. You know, right. It's always cracked me up. And people are like, oh no, well, you don't understand what's going on. I'm like, guys, if it was, they wouldn't have sold it at that price. You don't realize how many people just cashed out. Right. Like not completely.
And if you take 10% off the table just to like make sure, like if this whole thing goes pear-shaped, at least I got that out. That whatever. But yeah. When people basically liquidate most of their holdings, it's like, okay.
Yeah. Well, and you know, or just an IPO, right? Like it's and usually founders aren't liquidating a significant percentage of their holding in an IPO, but people with intimate knowledge, that's who's selling the company. Insiders, by definition, employees, long-term investors. Right? If they thought that stock was anywhere close to where it's currently trading, they never would IPO'd at that level.
Yeah.
And so it's just like the market going, yeah, well, we disagree with you. And you're like, well, you don't know anything about the stock. Anyway, it just, that dynamic cracks me up. There was another one like that. Well, I'm trying to remember the one that most recently happened. Same scenario. I had to get in a bunch of arguments with idiots on Twitter trying to tell me why I was wrong. And you're just like, guys, very simple fact here. Now, can you have a company IPO and then shortly after the IPO something happens or there's an announcement or something that changes the complexion of things, sure, that can happen both to the good and bad side.
And Circle is actually a good example of that with legislation passing right after their IPO. It was like perfect timing for them.
Yeah, but what I would say is that everybody knew that legislation was coming down the pipe. That's the other thing that's frustrating about this market. Like the more I feel like the more, and we've been saying this for a long time, but it just continues to compound. The more experience you have navigating markets, the more that hurts you in this current regime.
Yeah.
Yeah.
I have nothing to add to that.
Yeah. It's like I've said, like the idiots keep winning. And then, people are like, well, idiot, why don't you get in and be like, dude, because I manage other people's money. I can't touch that crap. I can't turn my client's portfolio into a Dogecoin type portfolio, where people are just bidding up nonsensical trash.
Speaking of idiots winning, I don't know if you saw, but it looks like Chamath is going to go launch some more SPACs now. He put out a poll.
I saw that
on Twitter.
It's like 70%
overwhelmingly said no. He's like, that's cool. I talked to some important people and they like it, so we're doing it. It's like, thanks for the poll.
You know what though? Like, look, I've kind of come around on him a little bit. I don't.
Makes one of us.
Well, I don't like, meaning over time. When I see, I think there's a lot of things right now that I think there's a lot of grift going on, right?
Of course,
and I agree with Chanos. I believe this is the golden age of fraud. And I think it has been for quite some time. And I think that is for a confluence of reasons. I think regulators are completely asleep at the wheel.
It's not complicit at this point. Yeah.
Yeah.
With crypto, at least.
Yeah. It's hard to defend what they go after and what they don't. I mean, it just doesn't make any sense.
Not to mention lots of grifters have made their way out of jail in the last 6 months.
Yeah. Yeah.
Which is a weird one. And I don't understand that.
Well, it's even why, like, if you listen to a lot of the regulators, specifically the SEC, they'll cite like, oh yeah, we're doing our job. 8 billion in fines handed out this year and da-da-da. And you're like, guys, what, okay, cool story. What does that have anything to do? Well, we're punishing no, you're punishing who you say are the bad guys. Right. But meanwhile, I hear people saying,
if you punish Apple with like a $20 million fine, it's like,
right.
Cool. Here you go.
Right. Well, and then yeah, you say you're doing that, but I hear people saying things on national television that are absolute securities violations and nothing happens. It's just mind blowing to me. And again, I'm not.
And those fines just don't do anything. It's a lot like, we've been talking about the immigration stuff. If you want to fix immigration, you actually hold people accountable for employing them. And the laws on the books, if you look, like they do almost nothing to you if you get caught employing an undocumented person, which is another way of saying we don't care.
Yeah.
Which is kind of like, especially when it comes to the banks. I remember when the banks would do something like just terrible. Yeah. They'd be like, oh, you guys are jerks. Like $20 million fine. And you look, it's like 0.0001% of earnings. Right. You're like, that's telling them you don't care about that.
Yeah. Again, I'm not criticizing the SEC and I'm not criticizing regulators. I'm saying it makes no sense to me what they go after and what they don't. I can't find any rhyme or reason to it. I mean, obviously they go after people they think are doing things wrong. I'm not saying that. The way they weight it is just curious to me.
Yeah.
There's so many like, well, I wouldn't say obvious frauds, but there's so much smoke. There's so many like smoking piles of trash where I'm like, hey, you want to just take a look at that?
Or even the enforcement of something after it happens. Like,
yeah,
if you go back and look at everything the SEC said Elon couldn't do after that dust up, he's done a lot of it and just nothing's happened.
Yeah.
It's like, but I thought you said he couldn't. Okay. All right.
Yeah. Yeah. I don't know, man. It's weird times.
Before we get to the market rundown, I have to inject some humor, something funny today. And Jason sent me this. This is about Fed independence. This is a quote from Senator Kennedy. He said, the only places where the central bank's not independent is in countries whose Powerball jackpot is 287 chickens and a goat. You can always trust that guy for a one-liner.
I love that guy. He cracks me up. I don't think that he necessarily gets all the nuances involved with the subject that he's talking about, but But regardless, to say, you gotta respect him because he's consistent and he's right about how absurd the spending levels are and the debt levels are. But I definitely think that he underestimates the level of pain it would take to get, spending back under control.
Yes.
All right. Give us that market rundown.
All right. 287 chickens and a goat.
Yep.
All right. S&P closed down 0.22. Pretty decent little range on that today, as today was a pretty big, over a $4 trillion OPEX. Qs were down 0.4, small caps down 0.2, equal weight showing out today at 0.16, Mag 7 down a little over 1%, all world ex-US down about 1.5%. So kind of non-US stocks had an ugly day, and that was pretty global. Like nothing really seemed to get spared. And that was with the dollar only up 0.02, so not like some massive dollar strength. Bitcoin down another 1%, under 104 now. Oil closed at $74, up less than 1%, but up on the day. Gold down 0.7, silver down 2.5, platinum finally giving some back, down over 3. And then rates, you're down 3 basis points on the 2 and 1 on the 10, so pretty much a nothing burger from bonds. And vol closed up about 1.5%. You're still right around 21.
Yeah. I was hoping that we'd see a vol sell off because I wouldn't mind getting back to
The 17, 18 even. Like normally that's not low enough, but in this environment, it feels like that's about right.
Yeah. Yeah. And we've done this at other times, but this is definitely one of those times where I would not mind buying some vol at the end of every Friday session.
Yeah.
Just hold
given what's going on in the world.
Yeah. Yeah. What else do we see out there? I really didn't notice a whole lot today. Like I said, I think today is, we were talking about the Qs, how it's kind of weird that Apple's been kind of almost an inverse of the Qs. On days where the Qs are up, even pretty big, Apple's had a tough time getting out of its way. Considering its option to expiration day, and considering the move on Apple, because you see the Q's down 0.4, 0.5, somewhere in that ballpark, and Apple up 2.2 or something like that.
Yeah, this is a big day for Apple.
Yeah, on no news, of course. But considering its options expiry, I think that you're going to get a lot of movements. We always see that. Some I wouldn't say weird, but just kind of out of the place movements on big OPEX days. So that's not a huge surprise. Go.
One other thing today that kind of stood out to me was, and our colleague Marcos has talked about this, but Chris Waller, to me, he's gone from angling for the Fed job to just begging for it.
It sure sounds that way.
He came out today and was like, we might cut next month.
Yeah.
And then immediately a bunch of other people from the Fed were like, no, dude. So like, it's awkward.
Yeah. He sent a note to the White House that said, do you want to be friends, with a little yes or no box, check one, right? He's already sent his little note to Trump.
Yeah.
He's pitching for that role. I was talking about this yesterday. I hear so many strong thoughts about the Fed. Truthfully, if you're to put a gun to my head, I think the Fed could have justified either. I think they could have justified either side of it. I think it's a really hard argument. And what I was saying was, look, I'm not taking a shot at Trump when I say this at all. But when you look at the data, bottom line, Trump's talking about a point and a half cut, something like that.
Well, that goes up every time he says it, but yeah.
Yeah, but I
think the last he said was 2.5.
Yeah, you just can't justify that with the data that you currently have.
And I think it's important to point out too, like what I think he thinks that means it isn't really probably what it means anymore anyways. And to more to that point, it may be bad. Like removing all that interest income off T-bills may actually be a bit of a drag on the economy. Like, so I don't know. But
the other thing that you pointed out, and again, I could be wrong, but my read on this is, now the Fed will probably try to cut before, would be my assumption, but that back end of the curve thing, I think I think it is a much bigger concern than it is getting paid, than is being discussed.
Right. There's no guarantee that the back end comes down just because you cut the front end.
No. And what I would want to see before I started cutting aggressively, if I was in charge, what I would want to see is I would want to see genuine fear come into markets prior to cutting, right? Like I'd want to see, now you may not be able to do this. It may not play out this way. Timing wise, it probably won't. But ideally, I'd want to see the back end dropping before I cut.
And that may be part of their reaction function.
Yeah.
It may be that simple as like, hey, look, when that 10-year gets back under 3.5 or whatever, like, yeah, let's cut away.
Yeah, because if you do it, but my feeling is either way, if you do it at the wrong time, and if the back end rallies off of a cut, which it may not, my feeling is it will. I would, if you told me that they were going to cut at this meeting by 25 basis points, I probably would have shorted the long end.
Yeah, I think you would be up 10 basis points, something like that.
Yeah.
Just like when we did the 50 bip cut and it didn't appreciate that.
Yeah.
Could have been a coincidence with other stuff. Who knows? But like,
yep.
To me, it was a cause and effect. But
and you could see a scenario where I think rather quickly, because the Fed funds rate right now is at what, 4.5?
Yeah, 4.5, I think.
4.5.
Wait, yeah, 4.5 because we did 4 cuts after 5.5.
30-year and the 30-year Treasury is at 4 what? 4.7, 4.8? Somewhere like that. That's got to be right around there.
Yeah.
Okay, so you've got like a 30 basis point gap between
4.89.
4.89. Okay, so wonder what, like if we look at the last 10 years, I wonder what the widest gap between the 30-year and the Fed funds rate has been. I wonder what that average range is.
On the laptop, I'd do that one, but
yeah, it'd be interesting to see. But my guess is I would be shocked if it had ever been wider than 100 bips over the last 10 years.
Yeah, I mean, term premium, it went from negative to just being a little bit positive really in the last couple of years. So
yeah, because basically
hasn't been substantial in a long time. Yeah,
because for much of the market move, up until 2020, up until COVID hit, the 30-year was just basically tracking the Fed funds rate.
Because so you're 39 basis points above it.
Yeah, right. So all I'm saying is, if you're the Fed, you have to be concerned and you have to be cognizant of the idea, okay, we start cutting big and all of a sudden you're looking at a 250 basis point gap between the Fed funds rate and the 30-year. I don't know what that would do, but whenever you see big breaks in the world of finance, especially regarding two things that are that foundational, and I can't tell you what that would unleash. I don't know, but that could create some serious chaos and I guarantee you there'd be trades based on that would be blowing up right and left. You know what I mean? Like you would suspect anyway. And then the other part about that is, again, this is just a feeling. I don't know that, but in an environment like that kind of feels like if that happens, that feels like a toothpaste back in the tube type scenario, where they could be chasing it for a really long time.
Yeah. I mean, we've basically been above target on inflation for 5 years. Like why? And not only have you been above target,
but it's moving. It's moving back up right now too.
It looks like it'll probably bottom here. And the Fed we're at 2.15 and the Fed has this at 3.
At 3 by the end of this year.
Which means they think you don't just go up a little bit from here. So like, why in the world would you cut a bunch into that?
Yeah.
If you want the back end to look at you crazy, you would cut into accelerating inflation with, a deficit that's higher than everyone thought it was going to be 3 months ago, et cetera.
I don't know. It would be interesting. I would love, and people are like, yeah, he's a real estate guy, blah, blah, blah. I think that's oversimplistic personally, but I would love to hear, I would love to know what his honest thoughts are and why he thinks rate cuts are so appropriate right now. Because again, it's not a political statement. I'm just looking at the data going, you want to cut how much?
Yeah.
Then the other thing I was explaining on this podcast was inflation you look at the history of inflation, it's a grease fire, man. It's so hard to put out, and just when you think you've got it extinguished, right, boom, it pops up again. Like that's the way inflation works. And, could the Fed justify a 25 basis point cut right now? Absolutely. I think, like I said, sure. I wouldn't have been shocked.
And they're telling you they're going to do 2 the rest of the year, so they're not running from that either.
Yeah. And but I think you look where inflation is, you look at the threat of tariffs, you look at all that kind of stuff. And I would actually be sitting there going, hey, Donald, I understand what you're saying. And we would all like to be able to refinance at lower rates. We'd like to have rates lower, but you better make sure this boogeyman is back in the cage before you
right.
It's just, that could get, you could be looking at reigniting.
And to be fair, I do think we did 100 in the last, 18 months or whatever, four cuts, even that to me, obviously nothing bad's happened, and inflation has come down a lot since then, which has largely validated doing it. But
yeah,
I think you can argue don't even do that until it's done. Although, as I've just argued, you can make the argument the higher the rates, the more it's pushing growth and inflation, and that bringing them down is actually the answer. But that's the tough part.
Yeah, that's the controversial take, right?
None of us. It's not super clear yet if we have crossed that Rubicon, although it looks very possible.
Yeah, and that's and quite honestly too, when we sit there and talk about these things out loud, I think that's what makes this market so uniquely challenging to operate, because you have so many unknowns, right? And so many things that we've never dealt with.
Yep.
And then you have all that in an environment where asset prices are to the freaking ceiling. You know what I mean? So you've got all these uncertainties, yet none of them are priced. And when I say that, I'm not saying that watch out because they're about to get priced. I would bet they're probably not.
Yeah.
You and I were talking earlier, and this is a much bigger conversation. It's probably a fun one to have with somebody else and in another interview. But interesting thing I was thinking about the other night was actually last night. I was like, I can't remember. I was actually talking with Pat. I had him over for dinner and we were having a conversation about this. And I just said, the more and more I think about this, it would not shock me if 15 to 20 years from now, public markets were seen as for the plebes, that big money didn't operate there anymore. And the reason I say that is because, even Buffett's made comments like that. The market, because of retail involvement and all that other kind of stuff that we all know about, it's getting more and more casino-like. And what that means to professional investors is it is getting increasingly hard to manage risk, because when things don't correspond to fundamentals, one of the biggest ways as an asset manager that you manage risk is by managing or keeping a close eye on the fundamentals of your underlying investments. That's one of the quintessential, guardrails, if you will,
sure,
on risk management, and it's just getting increasingly harder. And then, like we were also talking about too, so many of these really valuable types of value companies that we own that are very undervalued, that are very good businesses, no matter how you want to look at them, right? But just have valuations that are just in the tank because it's not sexy and people don't like it. Well, it just makes sense to me when you look at the kind of cash flow some of those companies are, that, it has always been the trajectory for the most part of companies to want to go public. When I look at companies like that, especially when they're unloved, why would you put up with the rigors of public markets and the risks you run and all the different costs involved of being public when when you're killing it and the public's in the market's pricing your stock at 4-6 times earnings? You know what I mean? It quits making sense. And you made the point that to some degree that's already happened. Yes, look at VCs, look at private equity, all that kind of stuff. But I could see, for instance, I'm sitting around looking at it and going, I could see myself ceasing to invest in public markets because I think so much of this is being driven by technology changes, the way people can access. And my whole thing is, I don't think things will stay bubbly forever, but I also don't know. From where I sit today, I would not be surprised if what this market does is now forever changed from what it has done. Do you know what I mean?
Yeah.
Because you made the point.
It's sort of like my green runaway freight train thesis of, if big things don't change this, the logical mathematical conclusion is a very dark place.
Yeah. Well, it's like, we were talking about great company. Again, not telling anybody to sell it. I definitely would not be as overweight as I know a lot of people are. But Microsoft, a $3.5 trillion company trading at 13 times revenue. People are like, this is like the doc, they're like, Microsoft's a great company. Yes, it is. But we were talking about that analysis we were reading from that. Oh yeah, Microsoft's still cheap. And you're like, dude, what world are you living on? 10 times revenue used to be a punchline. You know what I mean? 10. And that was usually for micro cap stuff, small cap stuff, right? That was growing at
super high growth rates.
High growth rates. Now you're throwing those on mega caps at $3.5 trillion that have, 13%, which is an incredible growth rate for a company that big. I'm not taking anything away from them. Just saying, like, as an investor, just there's so many things that are increasingly getting priced out of the bucket that we just can't pay that price for. You know what I mean? And people are like, well, why can't you? Why can't you? Because look, if and when reality sets in, you can't defend that. So you bought a mega cap company trading at 13 times revenue and you thought that was a good idea? Well, yeah, because that's the way this market works right now. But
as Frank the Tank said in old school, everybody's doing it.
Yeah, right. So it'll be interesting to see that way that plays out. But other than that, kind of a quiet week. I don't really have a whole lot else.
I got one last thing, I think,
okay.
And that is to go back to the central bank stuff and the president's clear desire to get rates way down. Something I'm seeing a lot. There's a Bloomberg article about a hedge fund whose manager tweets more than Bill Ackman. About how they put this huge bet on the 2-year because they said, well, Trump's going to put in, like a lackey Fed chair and they'll slash rates. Something that obviously is getting lost on people is the Fed chair is not a dictator. They don't get to do what they want. They're one vote on a committee.
Right.
So like you could put Don Jr. in there and then the other people in the committee could be like, yeah, we don't want to do that.
Yeah.
And then the policy doesn't go through.
Yeah.
So now can the president maybe sweep away a good bit of the governors and replace them or whatever? Like, sure. But like,
no, I will
that's
say,
not what people are talking about.
No, but I will say this. Look, the Fed by definition is a bureaucratic, entity, right? And so, yes, they all get one vote. Having said that, what the Fed chairman believes is in all reality, in my opinion, I feel like the Fed chairman probably gets the equivalent of what's like 2 to 3 votes.
Historically, whenever I think they were all just nerds, right? And just doing academic stuff. But now that it's getting all political, you throw a lackey in there like, hey, we're cutting rates. Like it's just so easy to see the other folks going, yeah, no, we're not.
Yeah. Yeah. But the reason why I think that the Fed chair has the equivalent of what is actually in reality is more than one vote is just because if you vote the wrong way, but you vote with the Fed, that the chairman of the Fed, he's going to take the blame for it, right? Yeah. He's going to get blamed. If you vote the wrong way and it's against the chairman of the Fed, you've just dangled yourself out there, especially in the world of peer review, academia. You know what I mean? So does that change the way the whole committee votes? No, but I
think to that point though, going back to Waller, that may be the best reason to hire Waller is, he is still an academic. He could probably build a consensus. If you throw like a legit,
I don't think he wants the job.
Yeah. If you just insert some clown in that's just going to do the bidding of the White House, that's where you would get the pushback. So I think the smartest thing to do would be, pick someone that fits in, they can build a consensus, but also will largely do what you want.
Yeah.
So in that sense, like maybe Waller is the right guy.
Yeah. Who knows? I don't really know much about him. I haven't followed it.
He's a smart
closely.
dude.
Yeah.
Like
his comments have resonated with me more. I've always kind of felt like he was credible. But he seems really cocksure about cutting rates. And again, man, I want rates lower too. But again, if you just look at, look at all the pressures on the economy and the fact that it's not rolling over right now. I just don't know how you make the argument that we have to have lower rates.
I just struggle watching somebody like shine the boss's boots in front of everybody else. Like, just he's making it so obvious that the positioning for the job. I don't know. It's
like I said, it's love letters, man.
It is. It's unseemly.
Yeah. Well, it is DC.
There you go.
You know, it is DC. Yeah. So it's part of the deal. Anyway. All righty, guys. Well, that does it for us today. Interesting week ahead, getting that OPEX behind us and see if it shakes anything out. I think the market's in a really interesting place.
Ton of housing data next week. So that will be
well, important. and generally speaking, you got a pretty interesting setup here. You got markets still, flirting with all-time highs. And yet at the same time, you look at more than half the companies in the S&P, according to Jamie, our junior analyst, more than half the companies in the S&P are under their 200 days, which is, again, doesn't shock me in this market because you're so top heavy, but that is not a normal situation for markets to be in.
I hate to say it, but like my current, gut would be that, that's going to rip higher. And just like this,
Same.
We're still getting through like recession fears. So there's a lot of people that still think that's happening, which is, hey, it might, right? But and if housing keeps deteriorating, sure. But at the moment, it feels to me like people are too negative. So like, I think of like the average S&P stock or the average small cap is like, it probably needs to re-rate higher 10%, not the opposite.
Well, yeah, I mean, but I think you've been able to make that argument for a really long time. Meaning, I think that for the vast majority of the last 10 years, you could make the argument that the top half of the S&P probably needs to pull back 10%.
That was the beauty of November, December, was everyone agreed. Everything was great. There was no wall of worry. That's when you knew, like, okay, we can lean against this thing. Yep. Whereas now you're like in that middle where both sides can make a case and there is a wall of worry.
Yeah, well, and in this market, for whatever reason, when you've got that 50-50 setup and you got things pushing back, default is higher. It just is.
Yeah.
So anyway, all right, you guys, you know the deal. Find us on YouTube, on InstaFace, as we like to call it, Instagram, Twitter. You guys know where we're at. Have a wonderful weekend. And as always, we'll be back on Monday. Until then, have a great weekend. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC-registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.